This is the AI News Flash for March 8th, 11 p.m. UTC. First up, oil prices have surged past $100 a barrel for the first time since 2022, with Brent crude touching $108. The continued closure of the Strait of Hormuz due to the Iran conflict has disrupted roughly 20% of global crude supply. Dow futures plunged 850 points, while S&P 500 and Nasdaq futures each dropped 1.6%. Traders are warning that oil could reach $150 by the end of March if shipping through the strait doesn't resume. Monday markets worldwide are bracing for severe turbulence. Next, California's independent watchdog, the Little Hoover Commission, has released a report on AI data center electricity costs. The report states clearly that the costs data centers impose on the electrical grid should be paid by the centers themselves, not by average California families already struggling with high utility bills. The Commission issued over a dozen specific recommendations covering power pricing, grid impact, and alignment with the state's climate goals. This comes as California lawmakers prepare new data center regulation bills, and the report's recommendations could influence the nationwide regulatory debate. Third, Chinese AI video generation models are posing an existential threat to the Hollywood film industry.
Kuishou's Kling platform has amassed over 60 million users, placing it firmly in the top tier alongside OpenAI's Sora and Google's Vega.
ByteDance's Seedance 2.0 generated hyper-realistic deepfake clips of Tom Cruise and Brad Pitt fighting, prompting cease and desist letters from Netflix, Paramount, Warner Brothers, and Disney. Chinese models undercut U.S. rivals on price and speed while shipping with weaker copyright and likeness guardrails, fundamentally challenging Hollywood's high-cost business model. Finally, the energy sector is experiencing a historically rare dual tailwind from both the AI boom and the Iran conflict. Surging power demand from AI data centers was already driving energy stocks higher. Now, the Iran war's impact on oil prices has added a second powerful catalyst.
Goldman Sachs' halo trade thesis favoring heavy asset, low obsolescence stocks is accelerating further in the energy sector.
However, for AI infrastructure companies, the picture is reversed. Soaring energy costs combined with physical threats to Gulf data centers from drone strikes create a double headwind that could slow AI industry growth. That's all for this AI News Flash.